Crypto kids, I think that the pump that Bitcoin is experiencing now is a trap. And I know it's an uber controversial statement to make. What's even more controversial is that I went short 20 minutes ago and I gave the update in the Crypto Kids Telegram community. We live streamed the entire move to the upside on the Moonshow Daily Crypto Live. It went on for 1 hour 40 minutes. We conversated with Elias that the Bollinger Bands have compressed to the most it was the highest amount of compression last seen in October 2023, and going above the upper Bollinger Band would bring, or either Bollinger Band would bring, a severe magnitude of a move. Thankfully, BTC chose the upper Bollinger. Our targets for the bullish direction was the 66.7K value area high and then the 200 daily moving average. Both were reached in just like 2 hours. After that interview, we reaffirmed those price targets throughout our daily crypto live and said that, hey, look, the 200 daily moving average, fantastic place to take some profit or even flip into a short. These are the two charts that unlock the secret to why I'm a bit of a contrarian and how careful I am with this position. Because if you're stuck in that short and Bitcoin decides to confirm consistent daily candles above its 200 daily moving average, then, ladies and gents, I would find myself in trouble, which I don't want to be in. So here it goes. The 4-day chart, falling wedge. Falling wedges are super bullish patterns. We got a falling wedge in the year of 2022. And with a confirmed breach, that simultaneously coincided with the 200 daily also being broken. I know this chart is a mess. Let's remove all the drawings. Trend line, resistance, boom. Trend line, support, boom. When BTC broke above it, it kickstarted the entirety of the 2023 to 2025 bull run. The same falling wedge applies. 200 daily moving, the purple line, right exactly at our resistance for the wedge. When you flip that from resistance to support, in every bear, you ended it confirmed and the bull market began. Going over the purple line historically has meant that the bear market is ended and now we will see a bull market. That's only if you confirm above it though, because in 2018, a midterm year, that's repeated so amazingly. We're a mush of 2018 and 22. I say this all the time. 2026 is a mush of 2018 and 2022. In May, once in a lifetime Bitcoin opportunity video, we said we got a capitulation in February. This year, we got a capitulation in 2018. That then created a higher low, which rallied you into the 200-day moving average. That then created a higher low in April. Both of these months were April. That rallied you into the 200-day moving average. When everyone was bullish at 81 and said the 4-year cycles are no more, I uploaded the once in a lifetime Bitcoin signal over on Crypto Kids. And this was during the Miami Consensus Conference. Let's bring it up so that people don't assume I'm not telling the truth. So videos, go down, go down, go down, go down, go down. Miami. It's been a while. It's been a while. There you are. Once in a lifetime Bitcoin. We knew that we were in a bear flag. We knew there was a short-term topping pattern. And the conclusion, I said that Bitcoin will likely take out its February low in June because it's what ended up happening in 2018. And we took out that February low in June. Now we find ourselves at the magical purple line once again in a summer month, and Bitcoin loves to rally in summer. So do we reject A or do we abandon the 4-year cyclicality? Well, as long as we have the 4-year cycles doing what they do, and we are, why should I abandon it? I'm going to trade in the direction of the 4-year cycle. I have a stop loss on this short at the day's high. And the daily high would mean that BTC is slowly starting to breach the 200 daily moving average and our other forms of resistance. we would only abandon, or I'm only abandoning Fourier cyclicality within the event of Bitcoin finding itself consistently above the purple line, which in my books is, I mean, I would love 2 4-day candles. I would love 2 4-day candles, and seeing that will initiate my $500,000 long position. But we can plan it accordingly, more pragmatically, as the days go by. I make daily content here on the channel, so stay tuned. I will walk you through what I'm doing. For now, though, in a short, because I believe in the Fourier cycles, if we go above the daily wicks high, I will exit, not be in a short, and getting confirmations above the 200 daily will make me say it, unless that happens. I think it's much more probabilistic that we capitulate into Q4. But as a plan B, if Bitcoin does, if it really abandons 4-year cyclicality, then I'll have to trade the market I have and not the market I want, and put in my $500,000 long and maintain it for 2.5 years. That is the play. That is my Bitcoin thesis. That is my Bitcoin price analysis. Looking quickly into Ethereum, we said that Ethereum is awaiting a breakout 30 hours ago. We highlighted that Ethereum's W formation, far more textbook than what Bitcoin had. And Ethereum's triangle is it's a bullish pennant. It's not a symmetrical triangle, it's a bullish pennant. The upper Bollinger Bands came in at the resistance of the bullish pennant. We said that I'll be optimistic for a rally towards 2,400 if we confirm above. We did confirm above. We find ourselves at 2.1. I've not entered any Ethereum long position because of the possibility that BTC can capitulate. And if it capitulates, then Ethereum will trap all of the long holders. I've been buying a bunch of spot Ethereum, and that's gone up in value. I'm very happy about it. If you are in an ETH long, then I would look into alternatives of seeing if maybe putting a stop loss at break even or taking some profits off the table now could fall in line with your management. But if I was in an ETH long, I would have definitely put my stop loss at break even and took some profits off of the table. Any fundamental news behind our rally, or is it just from people buying the asset? Well, there is some, I mean, it's huge, huge fiscal policy news supporting our short-term rally. The 30-year bonds, fell by 20 basis points. Fell by 20 basis points because the American Treasury had said that they're going to double the size of 30-year government debt buybacks following a surge in the yields. You see, America's got close to $40 trillion in debt, where nobody wants to buy it up, and they need to sell $9.5 trillion of it. When I say debt, I refer to bonds, which are called treasuries in the US. I know it can be confusing. So they need to sell $9.5 trillion worth of these things. And the largest buyer, Japan, was threatening a week ago to sell off their current holdings to support their own local currency. So we're in a market where nobody wants to buy American debts. The biggest holder of it wants to sell it. And this is all true at yields of over 5%, highest since 2007. Nobody wants to be a buyer. Nobody trusts that America can pay these coupons back. The geopolitics is a mess. And if America doesn't raise $9.5 trillion, then it goes into the risk of bankruptcy. But if you watch my Japanese yen carry trade videos, then you know that America will not risk that. So in a market of no buyers, America becomes the buyer himself. They have the ability to print money magically and buy up their own debts. If that's their last cause, they will use it. Seems to be that we're going into that last cause scenario. They're going to print money to buy back their own debts, to refrain from bankruptcy. Money that gets printed devalues the dollar. When the dollar devalues, scarce assets such as Bitcoin appreciate naturally against it. I hope you enjoyed this update. Tonight, I'll stream President Trump hosting a meeting with crypto executives, the NASDAQ and the New York Stock Exchange. And if you're curious about that, then I'll be live on the Moonshow channel. Thank you. Good night, and take care.